Let's talk about Remy. Let's talk about what's happening in the drinks business. Remy Cointreau shares gaining this morning. Decent bounce, as you can see, up by over 4%. The French cognac maker beating estimates on full-year operating income. Says it's going to take another year, though, to return to growth. The initial headlines I saw this morning, I have to say the initial read looked a little bit more downbeat. It's going to take a while longer to get things back on track, but actually maybe doing a little bit better than anticipated with the current numbers is enough to drive the stock. It's been moving lower, obviously, for a while. Duncan Fox from Bloomberg Intelligence joins us now. Look, what have I learned today that justifies the bounce, and what happens next? It still feels like it's a company that is in cautious mode.
It is, but it's looking for the long term, and it's confirmed its sort of 2029, 2030 guidance, where gross margins up to 73% and net margins considerably higher than they are today. So I think that was very important. And you've got to remember the shares have been hammered this year so far as well. I think it's about 26, 27% down on the year. So there's a relief that it's not worse than expected, part one. And two, if interest rates start to go down in the discussion you just had, that would be very good news for the US business, because if you're a distributor, it's quite an expensive thing to buy a couple of cases, or many cases of these cognacs. So for the working capital side. Exactly. So I think interest rates coming down would be a big help for this company in the US, which is a very, very big market for them.
Yeah, OK, so we're tying the corporate and consumer story back to the rate story. Which of the regions is most essential to them right now? Whether it's China, there seems to be made some progress in terms of cutting costs in that region, but the US marketing cost is a factor there. Which of those regions is most consequential, do you think, in the quarters ahead?
I think the US is the one that would matter most, because once you've got rid of the inventory from the system, then you should start to see people buy cocktails again if the consumers are confident enough to do that, and that will drive organic growth of the company. China is, they sell a lot of very expensive product into China, but they sort of got that where they need it to be. The only issue they've got there now might be if the Chinese anti-dumping program on cognac, or sorry, brandy, comes back to bite them. But I think that's more political than actual, to be honest with you, but I'm not good enough to quote on that one.
Be interesting to see what a Trump presidency could mean for the sector as well. Duncan, nice to speak to you. Thanks very much indeed for dropping by. Duncan Fox joining us from Bloomberg Intelligence on the Remy numbers.